So let's just start immediately in on our key points. Let's go to page 4. So just 3 key points here. I mean, the first is I want to go through why I think this big picture growth story is really misunderstood in a lot of ways. And I'll go through it a lot in this deck, but ultimately it's a brand that has about $1.3 billion now in a footprint, which is all of its sales through wholesale, retail, and licensing all grossed up at the aggregate level. And over the course of the next 2 years, through 2016, we've got it going to $3.3 billion. By 2018, going to $4.8 billion. So really big growth there. Across that same time frame, I've got operating margins going from 9.6 up to about 19, so about 1,000 basis point improvement. I actually think that's very, very doable. If anything, I think I'm low. So earnings in that context, up from about 30 cents last year up to about $3, actually a little over that by 2018. So again, very, very big growth as well. And I work up to a little, I guess, a roadmap here as to how I get to a $95 stock from $26 right now. So I would call that a big idea. Hope you do too. Now that's point 1. Point 2 is, and I won't spend a lot of time on this, but Kate is probably the hardest company to model that I've ever come across. Their disclosure is abysmal. You can't build a retail model. You don't really know wholesale sales. You don't really know licensing. They don't give great information about where they are geographically. And they talk about EBITDA margins, adjusted EBITDA margins, but now they're changing that accounting. I mean, it's just really, really difficult. Unfortunately, how they guide tends to follow that. We saw what happened there last quarter. I've got a couple of slides on that, and they're not pretty, but they're what you already know. The key is, I think that over the next 12 to 18 months, and I know half the people on this call right now probably care about the next 12 to 18 hours, but over the course of 12 to 18 months, I think that that will change dramatically, and we're going to see the name start to report their numbers like we see out of far better companies like Ralph Lauren and also Michael Kors. So lastly, as far as a key point here is that we're fine making this call into the print, which is in about another 20 hours. I think a lot of people know me. I'm not the kind of analyst where I make all my calls a day in advance of the quarter. We do like to find these really big ideas which play out over a really long time period. But I got to tell you, I mean, based on all the bad news baked into the stock right now, everything that the company did on that last earnings call, which was just so horrible in so many ways, I don't see really what they could do on the call tomorrow that'll really find them a whole lot more enemies on Wall Street. So I definitely think there's a heck of a lot more ways to win than lose on this one.